Hi, welcome to the first workshop of our week on April the 2nd after the 4-day Easter break. Yesterday was a holiday across Europe, although the US was open. Clocks have all gone forward across Europe, so certainly here in the UK we're back to a 5-hour difference against the USA, having been a 4-hour difference for the past 3 weeks as the US had their daylight savings adjusted some 3 weeks ago. Markets, as I said, were open yesterday in the US, were fairly weak actually, and that was as a result, if we just look at our calendar here, of the ISM Manufacturing Purchasing Managers Index came in a lot weaker than expected at 51.3. There were some mitigating circumstances, but nevertheless it was a disappointing number. Overnight news, we've had the Reserve Bank of Australia maintaining rates at 3%, so no great shakes there. Early on today, well, we've had some fairly depressing news really. We've had the Purchasing Managers Index for Europe, or the individual countries. Here we see the Spanish one at 44.2, but that was a 5-month low from Spain. But Italy's notched a 7-month low at 44.5, and France actually their rate hit a 3-month high, but that's nothing to write home about, which is still at 44. So you can see the difference between Europe and the US, with the US at 51.3. Very, very poor data really in the US. Overall, the Eurozone Purchasing Managers Index came in at 46.8 compared to 47.9 in February. And just remember, everybody, anything less than 50 is a contraction in the sector. Anything above 50 is expansionary. So again, it is notable the difference between the Eurozone, the UK, and the US. And in fact, talking of the UK, we had our manufacturing PMI out as well early on this morning, 48.3, weaker than expected as well. Unusually, sterling got hit quite badly and the euro didn't suffer too much, despite the poor Eurozone data. We also had record unemployment in the Eurozone as well, which was very disappointing. But as you'd expect on the first day of the month, the first day of the quarter, the markets have actually remained quite positive despite the manufacturing data, the poor manufacturing data and the poor unemployment across Europe. I think it's largely, well, first of all, due to the fact that it's the first day of the month, first day of the quarter, and stocks tend to stick to the normal routine. I think the Cyprus issue, that seems to have faded a bit really. I know it's still quite a major issue for obviously investors and the Cypriot economy, but the markets in general now are focusing more on the run-up to our non-farm payroll, or the non-farm payroll from the US on Friday. Even heightened tensions in the South Korea doesn't seem to have had any major negative impact. So I said, the euro has been under pressure, or had been under pressure early on, but I think most of the focus is going to be on this non-farm payroll now for the rest of the week. The data is key because the Fed targets employment, and I think until unemployment really comes down further, there's going to be little chance of any change in interest rates or indeed quantitative easing conducted by the Fed. So let's have a look at the calendar. Tomorrow is the leading figure really from the ADP. Let's just go to that here. The ADP non-farm employment change. That number can be a little bit volatile, but it does give us a clue or a guide as to what the government statistics from the Bureau of Labour Statistics report on their non-farm payroll on Friday. And as I say, it is the key bit of data for the week. We do have other stuff coming out before then, though, and for all the of you watching interest rate policy announcements, etc., we've already had the Reserve Bank of Australia. We've got the ECB and the MPC again this Thursday. Little prospect of any movement in either the Eurozone or UK interest rates, but just for the record, the timing of those, we've got the sterling announcement that's announced at midday, the official bank rate and the QE policy there. And then 45 minutes later, we've got the ECB's announcement at 12:45 our time in the UK. Again, no change expected there. So we really then lead on to the key data for the week, which is the non-farm payroll on Friday out at 1:30 UK time. We're expecting a positive number again in terms of its impact, but not quite as headline grabbing as the previous month, 201,000. Notable that the employment rate isn't going to be budging from that 7.7%, so we don't expect really there to be too great an impact on the markets. Of course, anything better than 201,000, I think the market will respond quite positively. Anyway, good luck for the rest of the week. We will be meeting again on Thursday morning for our second workshop of the week. Thanks very much.